If you have more than a certain amount of money sitting in your bank account right now, you need to hear this immediately. Because right now, today, three separate things are quietly happening to that money at the exact same time. And the most dangerous one is the one your bank will never warn you about. Not because they forgot, because it makes them money and costs it to you. The moment your balance crosses a certain line, the IRS begins paying attention to you. Your money begins shrinking quietly every single month, and a portion of it stops being protected entirely. I am going to give you three things today: the exact dollar amount that is too much to leave sitting in a normal bank account, the three silent dangers destroying your savings right now, and the 5 specific places that careful Americans are actually moving their money so it is safe, protected, and finally earning something instead of sitting still and shrinking. Stay with me to the end, because the last part is the part nobody explains to you for free, and it is where the real money is. My name is Dr. Diane Marshall. I spent over 2 decades working inside the federal legal system, and what I am about to tell you is completely legal, completely legitimate, and something your bank is counting on you never finding out. Before we go further, subscribe right now to Alert Americans and turn on notifications. Every single week, I bring you the information that protects your money, your rights, and your future in plain English. Hit that button now. Let us get into the 3 dangers. Danger number 1. The IRS is watching your account right now. This is the one that surprises people the most, and it is the one your bank will absolutely never bring up. Under federal law, anytime more than $10,000 in cash moves through your account in a single day, the bank is required to file a report with a federal agency. That report goes into a government database with your name on it. But it does not stop at $10,000 in cash. The software your bank runs is watching your balance and your habits every single day, quietly, automatically, looking for anything that breaks your normal pattern: a sudden large deposit, a sudden large withdrawal, money moving in a way it has not moved before. You do not have to do anything wrong to get flagged. You only have to do something different. And the bigger the pile of money sitting in that account, the more attention it draws. The algorithm does not care that you are honest. It cares about patterns, and a large sitting balance creates a pattern that keeps your name in the system permanently. The simplest way to stop being watched so closely is to stop keeping so much in the one place that is doing the watching. Danger number 2. Inflation is robbing you every single month. This one is pure mathematics, and it is happening whether anyone is watching or not. Inflation is currently running at around 4% a year. That means everything you buy costs roughly 4% more every year than it did the year before. Now, here is the part that should make every American furious. The average regular savings account in this country today pays less than half of 1% in interest. Read that again. Your money is losing more than 4% of its buying power every single year to rising prices. And your bank is paying you less than 0.5% to compensate. That gap, the difference between what inflation takes and what your bank pays, is money leaving your pocket every single month. Silently, automatically, without your permission. If you have $50,000 sitting in a normal savings account right now, that money is losing close to $2,000 of real spending power every single year. And you did nothing wrong. You just left the money where the bank told you it belonged. Meanwhile, your bank is taking your money and lending it to other people at 6, 7, 8, 9%, keeping the difference. Your money is doing all the work. The bank is keeping all the reward. Danger number 3. Part of your money is not protected at all. This is the one almost nobody checks until it is too late. Every account at every bank in America is insured by the Federal Deposit Insurance Corporation, the FDIC, but only up to $250,000 per person per bank. If you have more than that in a single bank and that bank fails, every dollar above the limit is not protected. You can simply lose it. Gone. No recourse, no appeal. People assume bank failures are ancient history. They are not. In 2023, this country had 3 of the largest bank failures in its entire history within the span of a few weeks. Silicon Valley Bank, Signature Bank, First Republic Bank. The people under the $250,000 limit were made whole. The people over the limit waited and worried and hoped. You never want your life savings to depend on hope when staying protected is so simple to arrange. Now here's the number you have been waiting for. How much is actually too much to keep in a normal bank account? The answer that careful financial planners give consistently is this. Keep 3 to 6 months of your regular living expenses in your checking and everyday savings account, and not much more than that. For most Americans, that lands somewhere between $15,000 and $30,000. That is your emergency cushion. The cash you can reach in a moment without penalty or delay. Everything above that number does not belong in an account that is watching it, shrinking it, and barely protecting it. Everything above that number should be moved somewhere better. Here are the 5 places that careful Americans are actually moving it. Place number 1, a high-yield savings account at an online bank. These are real, fully insured savings accounts run by well-known institutions that simply operate online instead of in a building on Main Street. Because they are not paying for expensive branches and staff, they pass that savings directly to you in interest. Right now, these accounts are paying around 4 to 5% interest. That is roughly 10 times what your regular bank is paying you on the very same money with the very same federal insurance protecting every dollar. The money stays completely liquid. You can move it back to your checking account in 1 to 2 business days whenever you need it. Opening one takes about 10 minutes from your kitchen table. There is no reason not to do this today. Place number 2, Treasury bills. A Treasury bill is a short-term loan you make directly to the United States government. It is considered one of the safest investments on earth. You can buy them in small amounts directly from the government at treasurydirect.gov. Right now, short-term Treasury bills are paying in the range of 4 to 5%. Here's the part most people never hear. The interest you earn on a Treasury bill is completely free from state income tax. If you live in a state that taxes income, a Treasury bill can quietly put more money in your pocket than even a high-yield savings account paying the same headline rate. You can set them up to mature every 4 weeks, so you always have money becoming available. Safe. Liquid. Paying you properly. Place number 3, Series 1 savings bonds. These are built for exactly the moment we are living in right now. Because the interest rate on I-bonds adjusts automatically with inflation, by design, your money does not lose buying power the way it does sitting in a regular account. You buy them directly from treasurydirect.gov, up to $10,000 per person per year. The one rule to know is that you need to leave the money in for at least 1 year. So this is for savings you will not need immediately, not for your emergency cushion. Place number 4, brokered certificates of deposit. You may already know about regular CDs at your local bank, where you lock money up for a set time in exchange for a fixed rate. A brokered CD means you buy it through an investment account, which lets you shop the rates of hundreds of banks across the country simultaneously and pick the best ones. And here is the powerful part for anyone with a larger amount to protect. Through one single account, you can spread your money across several different banks. 100,000 here, 200,000 there. Every dollar stays under the FDIC insurance limit at each separate bank. All of it fully protected. All of it earning a solid, fixed rate. No single bank holding more than the limit. Every dollar insured. Simple. Place number 5. A money market fund. This is not the same as the money market account at your local bank. A money market fund, held inside an investment account, holds very short-term, very safe, government-backed debt. Right now, these funds are paying in the range of 4 to 5%. Completely liquid, no lockup period, no penalties for taking your money out whenever you want. For anyone with larger amounts of cash to protect, it is one of the simplest and safest parking spots available right now. Let me tie everything together, because the thread running through all of it is exactly the same. Keeping a large pile of money in a normal bank account does 3 things to you simultaneously. It puts you under a watchful eye you never agreed to. It lets inflation eat your savings while the bank pays you almost nothing. And above a certain limit, it leaves your money completely unprotected. The fix for all 3 dangers is one simple move. Keep 3 to 6 months of expenses in your everyday account. Move everything above that into your own name in accounts that are safer, fully protected, and actually paying you a real return. You are not taking on risk by doing this. You are removing risk and getting paid properly for the first time in years. Your bank is never going to call you and suggest you move your money somewhere it earns more, because the moment you move it, they lose it. The IRS is never going to call you and tell you how to attract less attention. The only person who can make this move is you. And every single one of these accounts can be opened from your home in less time than it takes to drive to a branch. If this video helped you, hit the like button right now. Share it with one person you care about who is over 50 and still keeps most of their savings sitting in a single bank account. A parent, a sibling, a friend, someone who worked hard their whole life and was simply never told that their own money could be both safer and earning more at the same time. That one share could protect every dollar they have worked for. Subscribe to Alert Americans, because every week we bring you exactly this: the information that protects your money, your rights, and your future before it is too late. Stay protected. I will see you in the next one.